Well, gents, let us get to your stock picks for today. Drikus, what are you hanging your hat on today?
Okay, Paramount shares, that's the B shares. It's the only one listed. It's on the Nasdaq. It's trading just below $11. You'll get by mid 2025, you'll get $15 a share for it. It's being bought out by Skydance Entertainment, and yeah, they're offering $15 a share. They won't buy everything. That's why it's trading at such a discount. It's still too wide of a discount. The whole industry is under pressure. A lot of them are extremely cheap, but this one so much more so. So if the takeover fails from Skydance, and they're injecting $1.5 billion of cash into the balance sheet, by the way, that's part of the problem for Paramount, is the balance sheet. They sit with $12 billion of debt that they will struggle to roll over in coming years. But apart from the debt, operating wise, it's doing much better. The company is actually releasing a lot of good content relative to what is actually mostly unwatchable stuff these days. Maybe it's just my age, but I regard most of the stuff that we're receiving here as unwatchable. But so they're releasing actually stuff that's much better content-wise, and that's doing quite well. It's lucrative for them. Think of something like Yellowstone, that's theirs. The new Landman will do well, etc. And they're also going directly to consumer. The direct-to-consumer streaming business is doing quite well and is growing at double digits at the moment. So turnaround story, trading at a 6.5 PE, being bought out, you'll receive a bit of cash back, and the rest of it is going into a new entity. And I think the story continues there.
Yeah, all right. Ricus, what do you have your eyes on today?
Well, I've had before, it's Home Depot, and it's a bit future music at the moment. The results were out a few days ago, which was pleasing, but not spectacular, because their main business, which is supplying the do-it-yourself home improvement market, things something like Cashflow, that's still in the doldrums as the American housing market is in stasis. There's not enough property coming onto the market, and there's not enough money around in people's pockets to afford a home. Once that market starts moving again, you'll see people starting to do home improvement again. That's their main business. What interests me more is the acquisitions they've done over the past few months or years, where they're moving more and more into supplying professional builders. They've just concluded the biggest deal in their life, or in the company's life, a few days ago, also with a supplier of building products to professional builders. This achieves two things. It gives them another avenue of growth, and it also soften the cyclical nature of their market a little bit, because a professional builder will tend to come back and buy whether the market is up or down. So I'm always looking for new growth vectors in established companies, and I think Home Depot is doing that.
All right. Well, thank you so much for your time and for your analysis today, gents. Much appreciated. That is all for tonight's Stock Watch. Thanks to our guests, Ricus Reeders from PSG Hole-in-One Ruimsig and Drikus Combrinck from Capicraft. Up next, The Close. Stay tuned.